We have the Taiwanese index, which is up around 1.3%.
So FY25 guidance they had given in their PPT, assuming that, these restrictions will be lifted.
You need to essentially break above the swing high of 22,783 on the way up.
And in terms of guidance, they expect the domestic business to grow 10 to 11%.
So 22,770 is where we are at, and 75,000 on the Sensex.
By the way, in 1 month, the Chinese market has massively beaten the Indian market.
Retail will immediately start operating as a new vertical for Covoge at almost $100 million USD per annum.
Markets are subdued. The benchmark indices are trading with a cut-off close to about 0.25%. The slew of Bajaj Autos launches continue, and now the much-awaited NS400 launch, the Pulsar NS400 launch.
In a matter of 2 months or so, this bid process and the final buyer will be decided in this particular deal process.
The markets have come off sharply from the highs. And the slide continues in the market. Sensex is down 1,000 points. The Nifty is below 22,400. That's been the day so far. We started off in the green, but then the downward descent in the market continues. You're watching Closing Bell live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me, Surbhi Upadhyay and Nigel D'Souza. And guys, now week to date, the Nifty is turned in the red with the kind of fall we've seen.
Well, indeed, and there's no really any place to hide, because you have a lot of large cap names. You have Reliance Industries that's under pressure. You have the Nifty Bank as well that's under pressure. So there's no real place to hide. And just take a look at the crisscross lines. Now, that'll tell you the story. At the start of trade, you had 2,000 stocks that are advancing. That's come down to around 650 stocks odd. So I don't know what the street is fearing, or is it just routine profit taking? We've got a big US jobs report that comes out later today. But the Fed commentary was more or less acceptable, and that's why we see that global markets are fairly stable. But we have come in for profit taking today. We outperformed, mind you, in the month of April. The Nifty did much better than global markets, so maybe just returning back to mean. Surbhi?
That's the last point. I think that's the only point that's making sense to me, because otherwise I've been trying to find reasons behind this fall. It's really uncanny, this fall. You will not find global reasons. Yes, there is a jobs report out today, but that's not really, disturbed too many global markets. A lot of European markets are holding out positive. And of course, Wall Street had a good day. The futures, even now, they're holding up quite nice and steady, about 0.5% up on each of the indices, depending on which one you're looking at. So this is not global in nature. There is no new, event or big news trigger that we can attribute this to immediately. But it just seems, what Nigel said right at the end, that maybe as we are running into election season full throttle, and we're looking at, of course, some of the additional data points to come out from the US as well. Maybe this is just doing some of the outperformance that the Indian market enjoyed over the course of the last 1 month or so. And also, we were discussing this deep internal discussion on what's causing the market fall. The consensus is Prashant is missing. Maybe that could be one additional reason. But no, and it's really large cap led, guys. And that's what I'm saying, that you can't ignore it. I mean, for large stocks like Reliance to fall 3%, L&T to be down 3% or so. Also, perhaps, just this is conjuncture at this point in time, that the earnings season maybe has not inspired too much confidence of too many sort of, upgrades coming in or re-ratings coming in. Earnings have largely met expectations, or they've been in line, or in some cases mildly disappointing. But whatever it is, this is an afternoon where profits are getting taken off. The Nifty is fighting very hard around the 20 DMA. Let's see if it can sustain it or not. But the mid-cap screen also looking at a fair amount of losses right now.
Okay, let's invite our experts then to find out how you should trade in the last 1 hour. Mitesh Thakkar and Rahul Sharma, Director and Head of Technical and Derivatives at JM Financial. Both of them are there with us. Mitesh, first, go for, tell us what you made of the day so far. Any reasons, what's causing this kind of a decline that we've seen, and the trade?
I don't think I can attribute a reason, but I think it looks like a pure bout of profit booking. I think it's only the intraday charts which have been damaged a bit. The rest is pretty okay. We are still above the 10-20 day averages, for both the Nifty is just floating around with the 21 day exponential average. But the Bank Nifty is comfortably placed above it. So it doesn't look like a start of a big move on the downside. But yes, there is some profit booking, which means that there could be a phase of consolidation. Now, working out the lower levels of this range, I think in the worst case scenario, I'm penciling in that we could go down to as low as about 22,180, 200 zones, which was where the gap happened last Monday. And on the upside now, 22,750, 780 becomes a very clear-cut defined supply pivot. So I think, it could be a 500-point kind of a range. It's slightly early to say, but looking at the indicators, that looks like the more probable outcome. Having said that, on the stock side, I have one buy and one sell. Bharat Forge is coming down to support area, so that's a buy. Keep a stop here about below about levels of 1230. Look for targets around 1285, 1290 on a bounce back. And JSW Steel is turning negative on the short-term chart, so some more profit booking can happen. So sell here with a stop at 870 for targets of 840.
Okay, got that, Mitesh. Thanks a lot for that. Well, let's get in Rahul Sharma as well, who's in charge of derivatives and tracks it very closely at JM Financial. Hi, Rahul. Good afternoon. Good to see you in, Rahul. I'll tell you what, the evidence that we have seen in the last 18 months or so is that you like a FI net short market. They're going overboard on the long side. And this market is devoid of short positions. If there were shorts in the system, we would see some kind of a bounce from lower levels. But now, we are falling purely on the cash market selling. Your view?
Yes, absolutely, Nigel. You've hit the nail on the head. One thing that is definitely not comforting is the India VIX going above the 15 mark. Secondly, last 7 days of whatever activity that we had in the Nifty has been taken down in just one trading session today. So the speed at which Nifty has corrected is definitely alarming. At the same time, because there are probably not enough shorts into the system, especially from the FIs, the short covering is not happening. Now, technically speaking, there is a cluster of support for the Nifty. The 50-day moving average is around the 22,200 mark. 22,000 has been like a very solid base in the previous month. We expect it to continue as well. So we feel the correction could be shallow. In terms of points, it may look very big because, mind you, we are at a 22,000+ kind of an index, and we are just 1% down from day on day. So my sense is the corrections could be shallow, but India VIX sustaining above 15 would mean that such kind of moves where Nifty goes up and down by 200-300 points in a day or two is something that could be a norm. And secondly, just wait for a follow-up round of selling to properly, sort of gauge this kind of a move. Because in the past also we've seen Nifty seeing profit booking and immediately next day some kind of a bounce back comes in. So we'd rather wait for a Monday to see a round of follow-up selling happening in case the view needs to be changed.
Fair enough. Yeah, that is true. Most of the time, these kind of cool-offs have been very, very shallow. Mitesh, just on the large caps, because it's that kind of a day when a lot of names are under pressure. Like I was, pointing out earlier as well, there's a L&T, there's a Bharti Airtel, there's a Reliance, a couple of others as well, ITC. For the very short term, would you want to initiate any shorts over here on any of the major blue chip names?
See, I think as I said, I picked up JSW Steel as one of the stocks which has declined. So I think, yes, there could be some indicative shorts. In fact, I'm waiting for Reliance to break below 28.30 odd levels. If you look at the recent price movement, Surabhi, we had a 28.36 as the low on the 15th of March, closing on the 15th of March. And if we start breaking below that important pivot low, then I think you might see another 70-80 rupees kind of a decline happening. So it's not a big move, but yes, from a trading point of view, Reliance is something on radar. If it breaks 28.30, maybe I'll have a sell call.
Okay. All right. Gentlemen, just stay on. We have more questions for you, but we also will analyze some stocks and some of the fundamental news flow that we've got along the way. MRF has been reacting to what looks like a weak set for the fourth quarter. Sonia is joining in now with the fine print. Sonia, how does it look?
Well, it is looking weak, as you rightly pointed out. The problem is all the tyre makers, MRF and CAT, that have reported numbers, have reported growth in low single digits on the top line. So that clearly goes to show that there is moderation in terms of sales for them. And a large part of MRF's, clientele comes from the commercial vehicle space, which has undergone a slowdown as well. So hence, there is that disappointment. On the operational front too, the margins for MRF are under pressure. We are seeing rising raw material costs as well, whether it is tyre rubber prices, crude prices have gone up. So the quarter to come perhaps could see more pressure in terms of MRF's performance. Even on the bottom line, both MRF and CAT have reported a degrowth as far as the profitability is concerned. So all in all, weak set of numbers on all fronts, and now looks like perhaps things could get worse given the kind of spike we've seen in raw material prices. Back to you.
Deepak Shenoy, founder at Capital Mind, is with us on the show. Deepak, what's the advice for people who hold MRF? Should they be, looking to exit the stock or just keep the faith?
It's just a quarter. We've likely seen a bit of deferment in a lot of stuff that would normally happen in a March quarter because of elections and things moving to a different, I rather move or maybe offset by a few months. So I wouldn't read too much into this right now. Yes, of course, there are near-term pressures. Also, there is, there were both demand pressures and then on the supply side, some raw material prices increases are happening. I think we'll see this across the tire makers, with the possible exception of maybe Balkrishna, which serves a slightly different market. But, I expect the results there also to be weak. But in general, I would say keep the faith here longer term. MRF's margins have increased earlier in the last year or so. I think they've come back to a little bit lower number, which is more normal for it. But I think growth is in the future. Given it's a consumable for a relatively fast moving industry going forward, which is commercial vehicles and some passenger vehicles as well, I would say, if you're not here for the short term, then give it, 3-4 years from now, I think it'll do really well. The price is so high, I think very few retail investors are in it. But, therefore, I'd say I think you should have more patience on this.
Okay, all right. Have some more patience, Deepak. That's the call coming in on some of these tire companies. But let's talk about Coal India. The numbers are a little bit disappointing because the way they're treating the stripping activity, well, that's changed a little bit. So that's why the numbers on a like-to-like basis, or even in comparison with our poll, we couldn't really compare it. But if you just pull up the numbers, and taking into account, adjusted for the stripping activity, the EBITDA number was that around 9,800 crores. The margins were around 26.3%. And on an adjusted basis, that misses both what Jefferies as well as what Nuvama put out. The problem was that realizations were a little lower than expected. Case in point being the e-auction realizations. The street was bracing for a number of around 2,600 rupees per ton. It came in at around 55 rupees lower than that. So there's a 2% miss out there. Even the FSA prices were down by close to 100% on a year-on-year basis. So pricing was a bit of a disappointment. And on expected lines, the e-auction premium in comparison to the FSA prices, well, that's come down to around 66%. Today, I don't know whether it's something to do with Coal India or it's this PSU mining theme that's working. Because Coal India is higher, SAIL is higher, NMDC is higher. All of them have that mix of PSU miners. But what's working then for Coal India? Why exactly are we seeing a bit of a bounce? Well, dividend they paid off around 5 rupees, and for the year it was 25 rupees 50 paise. So dividend continues to support. Brokerages, though, some of them have trimmed their estimates a little bit. They continue to remain positive. You have Jefferies, buy rating out there. They've pulled back their target price a little bit. They've included a dividend payout of around 50 rupees for the next 2 years. And they're saying that the employee cost was relatively higher in comparison to their expectations, but they're expecting it to normalize in the coming year. They're also expecting the company to post a 5% volume CAGR over the next 2 years. Incred, they have come out with a note. They have a sell rating out there with a target price around 210 rupees. They're a little bit skeptical about buying a PSU name. So that's the reason why, in fact, they are a little skeptical, and they've continued to hold on to their target price, which is much lower. For FY25, it's been a good start. For the month of April, we had the production number that was higher, sales as well relatively higher. So it has to be said that it's a good start. And the final point that I want to put in is we have elections. Once elections is out of the way, the street will yet again start talking about a potential FSA price hike. 1 year ago, we got a price hike, but that was for only around 30% of the total FSA mix. So the street will be wondering whether or not there'll be a push through for the remaining 70%. So let's see how that goes. Deepak, that's about Coal India. What do you make of it? The number's a little bit lower, but there's a coal shortage, there's very aggressive power demand, and it's the only play out there. Your take?
Yeah, I think, it's a monopoly player here, so we don't own it. It's, very cheap. It's about 7 to 8 times earnings, fairly high dividend yield, probably bought more for that than for growth. I don't think growth is going to be even in low double digits. If it hits 9 or 10%, I think it would be fantastic for it. It did have a couple of very good years, but I think this is a dividend yield stock. So you should buy it for the fact that you'll get a very good dividend yield. And hold it for a long time because it's really a cash machine in that sense. And there's not that many opportunities of increasing its exposure other than the pricing. So when you have a situation where you're a monopoly, you can't even control price too much because the government comes after. The government owns it, but still, the government doesn't want it to price it unreasonably as well. So in this case, I don't think this is a growth story, so I'm not interested. But it's a good dividend-ish story. With the PSU tax, you'll always get it cheap, and you can always expect to sell it cheap also.
Okay. Deepak, hi. Good afternoon. Good to have you on as always. So we were throwing around guesses why the market's getting a little skittish at 22,750 to about, I think, then the all-time high, didn't touch 800, but around that zone. Twice it's kind of moved off. So one guess was Prashant is not on the show today. What's yours?
I'll be with you on that because I think that's as good a guess as anything else. Otherwise, I have to say, do this and say, oh, well, it's raining in Bangalore. Maybe that's why. So
that could be another one. Nice. That good one. Okay, coming back to something more tangible here and now. Want to discuss Bajaj Auto with you. I mean, today we had that, great launch of the all-new Pulsar. It's the biggest ever, NS400. And we had, the entire top brass in full form out there. My colleagues tell me the pricing is pretty interesting at 1.85 lakhs. It's fairly competitive. What do you think? I mean, the stock has already done so much. Is there more mileage? I mean, can it keep riding higher?
That's a good question. These stocks used to be at the 15, 16 PE range. They're now 32, 33. I think there's a lot of the growth that's been priced in has not yet actually reflected in numbers. I don't think it will even in this quarter or the next. But this next quarter, coming quarter, we should see a slightly better number because of, say, elections. If the rains are as strong as they expect to see because of the relatively harsh summer, the rural population will actually increase. Though Bajaj gets a relatively smaller piece of that pie. I think that combined with the tailwind of that combined with some, I haven't seen how the new release or the new bike is, but if it's at that price range and it's attractive, it might actually help cement the valuations. Though I feel valuations have run up a little bit, so you might see a little bit of a downward surprise, not because the company is doing badly, but just because the price run up too much. We don't own it. Honestly, we should have, but I think I wouldn't own it. I wouldn't want to buy it right now.
Okay, just want to sort of reading out some of the commentary that we got from Mr. Rajiv Bajaj. This is in an interview to Parikshit, where he says that Bajaj would like to reach 50% of Royal Enfield's market share in the next 6-7 months with a launch like this in the premium category with the all-new Pulsar. So that's really taking competition head-on, and that's Bajaj Auto in focus. Rima.
Wanted to get your thoughts on Coforge. It's a very sharp derating that we've seen, down 10%. What was so wrong, in terms of the acquisition? Fine, they didn't give us an annual guidance, but a lot of companies, even when they have, like an HCL Tech and Infosys, have disappointed the street when they came out with the annual guidance. But to explain this kind of a 10% downward reaction, what according to you?
I think the downward reactions, perhaps because of I think there were 3 or 4 brokerage reports that came. I didn't think the results were so bad, but when the reports came in, they all downgraded the stock to a sell and so on, which is probably why some of the corrections are happening. A lot of the corrections now, at least the way I see them, is because prices have run up. And even though results are okay, they come with this, oh my goodness, the prices were reflecting a much higher or much better result potential. And therefore, post-earnings announcement dips happen. And therefore, I think this may be just one of those. It's a good company, again, priced relatively higher compared to the others for a similar margin profile or growth profile. So I would say at this point, just wait and watch. We have a very small, investment in the IT industry in general, but that's more large cap. I think we are going to see still more trouble overall as services in the next maybe 1 or 2 quarters, and only after the US elections we'll see some more clarity emerge. There's lots of tax things that they're talking about in the US that will be a damaging thing overall for corporate in the US. So I expect a little bit of turmoil before that happens. So let's wait to see where the fundamentals change. I personally don't think the results are very bad, but I think prices are done up a lot more.
Okay, all right. Deepak, I also wanted to ask you about your view on BSE. It had a one-way move, right? The stock just kept moving up. Then you got that regulatory action, which meant that they have to pay that 150, 160 crores odd. But they've gone ahead and increased prices as well, which will offset some part of that hit that they've taken. Your view on that name, and we have an unlisted player there, which is NSE, which is trading at a cheaper multiple. But BSE is the listed one, and that clearly has got a lot of attention. If you had it, what would you do? And what about a fresh entry since it's corrected a little bit?
Yeah, so we own BSE. I think, honestly, we have this, we've had this for a while, Nigel. I think the idea here has been that as an exchange, they stand to benefit in general from pretty much most of the announcements that seem to be coming in from SEBI, where a lot of the regulatory focus has been shifting a lot of the business to exchanges, whether it was from the bond market, allowing smaller bonds to be listed and traded on the exchange, whether it is in the derivatives market, opening up of a few things or changing a few rules to accommodate. And BSE itself has benefited from these weekly options that they've started from September or so last year. Now, the ruling that has come in from SEBI is that they had to pay this one fine. You can see that for the last X number of years when they didn't have any options meaningfully, they've had only 30 crores plus 30 crores of interest as arrears to be paid. But for the last 6 or 7 months, they had 90 crores, 96 crores or so to be paid. That means the business has increased to that extreme. And they've also managed to increase the price. Now, it's not a direct increase because what they've done is charged you a percentage of the premium paid, whereas what they pay to SEBI is a percentage of notional. So it's a different thing, but I think it'll offset most of what they have to pay going forward. And I think if that's the case, this continues to be a reasonably good cash machine going forward. With the caveat that, of course, it's pretty dependent on markets. So if markets were to crash a lot, I would see volumes come down quite substantially from here. That's the risk, overall risk. And of course, when NSE in the private markets is trading at a much lower valuation, there could be some kind of a price adjustment to correct. So that these are the risk factors. But I think long-term story, 10 years from now, I think BSE is going to be a much bigger player than the 38,000 crores that it is at right now, simply because it's one of the two biggest players in the financial intermediation space.
Sure. Deepak, finally, before we let you go, I mean, on a more real basis, I was joking earlier, but the fact is that this is a market very close to all-time highs. It's getting a little sluggish. So, what's the route that you're adopting? Are you keeping slightly higher cash levels? What's the advice? And also just leave us with a view on Bajaj Finance and Kotak. I mean, in the mix of things, you have Fed, you have RBI, you have corporate earnings, and then you have all kinds of regulatory issues that can crop up. What's your advice on both of these stocks?
So interestingly, Surbhi, I think they've got opposite pieces happening for them. Bajaj Finance actually come out of a regulatory restriction imposed on it in November. So they're now able to lend. If you had noticed on Amazon, for instance, you would not get Bajaj Finance as an option because they couldn't do the card business and therefore they couldn't finance any loans on many of these online sites. Now they can. So we'll see that option open up. If you look at if you look at the numbers that RBI threw out yesterday, they mentioned something very specific. The credit growth has actually fallen below 20%. Of course, this is adjusted for HDFC's merger and all that. But it is slowing. Both personal loans are slowing again below 20% a year. This used to be 32%. Credit card outstanding growth has also fallen. In fact, it's for the first time it's dipped compared to the previous month. So we're seeing some action on the ground in terms of slowing credit. This may have been because, say, Bajaj Finance was not able to lend. Maybe the restrictions that have come on a Kotak, which will affect it going forward. But I think Bajaj Finance may be in a better position now that it is able to come back, and that the overall sector has kind of seen weakened growth. So they tend to be very strong in times when the competition is weak. Kotak, I think, has a longer way to go. There are so many uncertainties from money and leaving to what happens going forward to the regulatory restrictions and how they come out of it and how much time they take. So I would say there I'd have a more cautious view. Bajaj actually looks interesting, though. I mean, it'll have to come down to pricing and growth, which they haven't demonstrated quite as much of in the last quarter. Overall, as does markets look too expensive? It's 22 times earnings. This is not expensive by any historical stretch of imagination, and a lot of results are yet to come. So I believe here we're not too expensive in the larger caps. We may be a little expensive in some of the mid and small caps. So you've got to be careful and rebalance portfolios based on whether fundamentally something has changed. Pure valuations may not really give you a good reason to exit, but I think you must take action if things change on the ground. In BSE's case, for instance, we decided not to take action because we think they will recover whatever they have lost, which is more a one-time thing. But in other cases, there may be some structural damage happening in stocks, which you should take care about. I don't think this is a market you just want to blindly sell into. Of course, I could be wrong. The market's down already. It could continue to go down and all that. But I think you've got to play for the long game here, not the short one.
So one word answer, Deepak. Buy the dip on Kotak Mahindra Bank if you are ready to play the long game?
Not yet. I would say wait a little.
But Bajaj Finance, yeah.
Bajaj, yes.
Bajaj, I think you're more convinced, yeah.
It's not. It's probably not. It's bounced off the dip already, but I think they're at least a little more on stronger footing there.
Okay, thank you. Thank you very much for joining in, and enjoy your weekend too. We'll slip into a break. On the other side, Tushar Pradhan, director at Hexagon Partners, will join in.
Welcome back. You're with us on Closing Bell. Let's get the conversation to our next guest now. Tushar Pradhan, director at Hexagon Partners, is with us. Tushar, thank you so much for joining in. Great to have you with us on the show this afternoon. So, I just want to take forward the point that we've been discussing, how this market is positioned right now. at all-time highs after a stupendous rally. What have you made of the earnings season so far? I mean, do corporate earnings offer enough juice to keep fueling the rally further? I think you're on mute, Tushar.
No, I was just mentioning that it's a very interesting question because if you look at earnings growth per se, that is very much in line. And I think it's something that we should be very proud of to generate this kind of earnings growth. The issue is not that the earnings growth doesn't have juice. The issue is that how much is it already priced into the market, and especially some of the prices. So no matter how good your earnings are going to be, I think the market is always going to be a little disappointed if it is not anything much more than it is expected. So you can imagine, it's a reverse psychology at work here. While there is nothing wrong with the earnings, it is the expectations which is driving the volatility in the market for at least some of the more bigger companies at this time. That is my opinion.
Tushar, talking about expectations and what actually comes out, what if, the elections is the next big trigger, right? And when this election process started off, people talk about 350 odd. Do you think a simple majority is good enough, or will the street read further into the numbers and say, no, we expected 320? Or do you think a majority 280 to 300, that's good enough, and then we won't see any kind of selling? Because the market has been quite hot, expecting a positive outcome.
Yeah, I think here also the debate is in terms of what is the expectation. If the expectation is 350 plus or 400 or whatever, and that is what I think most of the expectations in the market are, then anything lesser than that is going to be a disappointment. Not because of the outcome, because we all know that it is not going to change the overall picture too much. But it is something to lead to saying that, which means that there will be lesser, I would say, parliamentary push to kind of get the reforms through in a manner which is much easier if you had more seats, etc., etc. So I think the debate will then start in terms of, what is the reform agenda? How quickly can, some of the things which are already, slated for the next 100 days after the election can be effected, and how much of that impact does, it cause to India Inc. per se. So I think it's not a simple judgment of whether it is below 350 or plus. It is more to do with the market's expectation. And if there is any disappointment to saying that, okay, if that number is not coming, that would mean that it may be a lot more difficult to pass through reform the way it was expected before. And I think that there will be some ramification to that. But having said that, I will also mention the fact that these are, really very, very tactical moves. I mean, we are talking about the next 10 years being a pretty significant period of growth for India as a nation in its history. So when you juxtapose that with, a weak electoral result, or even just any flash in the pan that may happen for whatever low probability it may be, I think we should really look past that to say that, look, even if it happens, it's not going to change the fundamental picture too much.
But just in the near term, if there is a disappointment on the electoral front, what kind of weakness are we perhaps going to stare at? Is it going to be a minor 2-5% kind of a decline, or can it shake the market maybe for the next 6 months?
Again, I would say that the markets pretty much are manic in most cases. So to make a sane judgment about what they will fall to will be itself a very foolish venture. But as you know, that markets tend to be pretty much over the board in whichever direction. So for example, if you have a compounding of impacts, say for example, beyond the near-term impact of the election, there may be another, say, a global geopolitical situation which may completely, be unexpected at that time, compounded with some other economic debacle or, some sort of things which, compound for that matter. Then you can see a significant drawdown, and that is obviously because of the forces of these factors coming together at one time. But I think if it is just the election that we are talking about, there will be a mild correction in the sense that people will say, look, not as much as expected. Maybe things will get a little longer to get affected, but it's not really changing the whole picture at all, and then the market will move on. And many times, at least in my short career, I have said and thought of that even more dramatic election surprises, I think the market has been able to shrug off within a week's time, if not even a few days. So again, I would not, really place too much, importance to the longer term nature of how our markets and our economy is. And yes, in the short term, it can be pretty volatile.
Okay. Fair enough. It is short-term volatility. So, Tushar, if you are, still constructive on the medium to long term, despite these elevated expectations and the run-up in prices, then how are you going about the portfolio construct? What do you like the most? What would you keep as a key overweight?
No, I think it's a very interesting question because many times people tend to follow what is popular. And what is popular may not necessarily be cheap. And what is popular may also not necessarily be what I would call a significantly long-term, idea. So I think one needs to be pretty diversified about one's portfolio construction activity at this time. I think I would have a very large share of significantly large, secure companies which have compounding earnings beyond the 5-year term. So we are talking about, generally the larger financial companies as such. I think I'll have a fair bit of chunk of that. I will also now focus a lot more on manufacturing. And I think this is where the idea becomes a little cloudy because some of these manufacturing companies are trading at unheard of valuations even as we speak. So while there is compounding where there is very secular growth quarter over quarter, one can imagine in the next 2, 3, 4, 5 years, yet, you might have to wait for a year or two before it starts to really generate real returns for you. Less of all the froth there is in the market. And I would then look at across the entire spectrum of consumption, of all of these newer technology companies which are coming to the market, which are not really big. So I would construct a really, really flexible portfolio with a large chunk at this time made up of, large to mid caps, and then some really very select ideas down the cap curve, down to the small caps, and becoming really specific about what you would like to choose. So I would bet on India. I would bet on manufacturing. I would bet on financials because that is really the fuel for the economy to go forward. And I think anywhere in any way that you look at it, I don't think interest rates are either going to crash or going to go up sharply from here. So you're looking at a very stable interest rate scenario. You're looking at stable currency. And all of that actually means pretty much a positive attitude that one should keep towards financials over time.
Okay, all right, Tushar. I wanted to ask you particularly about Kotak Mahindra Bank. That used to be the poster boy, right, in terms of banking names that made big wealth. If you talk to anyone between 2010 to 2020, they would say that's the bank that makes you big money, HDFC Bank, Kotak Mahindra Bank. Now, both of them have run into rough weather. For HDFC Bank, because of that merger, suddenly the street came to terms with the high cost, borrowings that they'll have to pay. And it's a toss-up between loan growth as well as margins and return ratios. So, how would you view this one? And Kotak Mahindra Bank, because of the recent regulatory action as well as the exit at the top. What's your view on both these two? Quality run names, near-term headwinds. Do you think it's near-term? Would you look to buy into either of them?
Yeah, again, a fairly nuanced question, I must say. It's not a simple way that I look at this. You have to understand that Indian banking, especially private banks, have had a very, very good run because they came off of pretty, I would say, virgin markets where most of these services were not available to, I would call, the larger unbanked or underbanked Indian population. They made banking extremely useful, scientific, and really in the face of most of our customers, which has increased the reach of people who typically bank through and the services which are offered. So that was the golden period. Now, one of the things you have to understand is that over time, companies as well as banks especially, they become fairly large. And the growth beyond that has to be much measured. So, for example, if you are look at the smaller banks. I think those are an example that I can give you what maybe a Kotak was or some of these smaller private bank were maybe 20 years ago. And the kind of growth that you will see in the smaller banks, the small banks as we call them, if they do their job right, is something spectacular, is the rate at which you will continue to see them grow. Now, once they grow to a size, and we are talking about now sizes of HDFC Bank, Kotak Bank, etc., the growth from here on is always going to be a much bigger challenge at the rate at which they are planning to grow. And typically, market will reward rates of growth rather than size per se. And the size gives it stability, but it will not give you the same kind of returns. Now, the two companies that we talk about, they are more of a near-term nature that I look at. If you look at HDFC Bank, and I've looked at this bank for a long, long time, every merger has brought some sort of, I won't say challenge, but it's something which takes time for the bank to actually digest it. And it's so many mergers that we've seen HDFC Bank do in the past. And it's always come out trumps after being able to absorb it. Now, the size of the merger will depend on, how long it takes for the bank to turn around. But I think given the size, its dominance in the market, and especially where it is positioned, it is probably a near-term headwind. If you look at Kotak also on the same, I think, changes at the top, people who manage, etc., that is naturally a transition that every bank will have to go through. Does that mean that the entire franchise is at risk? Does that mean that the whole strategic element of what Kotak brings to the market is at risk? I don't think so. But I think overall, what needs to be something that every bank, whether it is Kotak, HDFC, whoever, needs to heed is the ability to deliver in front of the regulator a franchise which is above board, something which they have to invest in and they have to be very serious about and ensure data privacy and ensure that the delivery of services is above board. I think if that is a focus for all of the banking industry as such, I think we're in a safe place. And these are good warning signs for ensuring that the banking industry remains pretty much intact over the period of time that we're expecting explosive growth in the economy. So I think maybe red flags at the right time, and the term being what I really focus on between 5 to 10 years from now. I mean, what's a blip like this to look like?
Sure enough. Just need to have that long-term vision. Tushar, good speaking with you today. Thank you very much for joining in. Really appreciate your views. You have a good weekend, and we look forward to the next conversation. Well, the market is trying to ensure that this fall doesn't get any deeper. For what it's worth, I mean, there's a fight around 22,400, and that level's holding. Little bit of a recovery from the lowest point. If I talk about some of the stocks that are trying to bounce off, TCS would be one of them, still down, but again, trying to move off the lows. NTPC also trying to do the same thing. State Bank of India at the flat line right now. So this is where the push and pull is really playing out. Well, that's the market for the time being. Let's take a break on that note. Come back on the other side. We'll get you all the buzz from dealing rooms. Let's see what Nimesh has picked up on today's fall. And then, of course, we get you some final trades with Mitesh as well.
Welcome back. Some bit of a bounce from the low point of the day. Coal India is the stock that's seen a big recovery from the day. So I think it's PSU-led. You have Coal India that's doing well. NTPC has cut its losses. It's on the verge of moving into the green. You have these PSU miners, as we mentioned earlier, that are doing quite well as well. It's a good time, though, to get in. Nimesh, well, tell us what's going on D Street. The markets are down, but I don't think really knocked out.
Oh, absolutely. Nigel, in fact, it has recovered from the day's low, right? But again, the fall today is largely dragged by the frontline names. No specific news or reason for large caps to fall so much. In fact, even in terms of flows, I understand it's a mixed day as far as flows are concerned. There is a small MOC basket as well. In fact, MSCI stocks at leading effect. So maybe you'll see a bit of recovery in the last 30 minutes of trade in some select MSCI stocks as well. I guess the sector seems to be, the PSUs that's continued to be outperforming and as well bid as well. So again, there is a lot of institutional interest in buying some of those select PSU names even in today's market. I guess from a technical perspective, we spoke yesterday as well. 20,400 is a very strong support on the Nifty. I guess we recovered from those levels in today's market as well. So maybe at least in the near term, that will be a big level to watch out. That is 20,400 on the downside. I guess, the other big theme seems to be the big reactions to earnings, right? We saw a big reaction to Coforge today. That is down 10%, despite falling 15% from the recent peak. So that outsized reactions to earnings is likely to continue. But I guess today's fall is maybe it's a bit of technical, but the FI flow seems to be still positive.
By the way, there is a recovery from the day's low, as you were pointing out. 22,348 was the low, hit around 2 o'clock. And since then, the markets have recovered close to about 140 points from the day's low and now inching towards 22,500. Nimesh, what have you picked up on individual stocks?
Well, the first name on my list today is TCS. After a long time, some bit of buying seems to have emerged in TCS as well. I understand a leading long-only US-based fund has done an active buyer in TCS of late. So that's the first name. The second is both IEX and Cyient. They were under pressure of late, largely on sell flows from large institutions. Looks like large part of the selling in both these names, both IEX and Cyient, seems to be largely over. That's the overall feedback. The third name is Godfrey Philippe. In a weak market, especially in the broader markets, that stock is relatively outperforming on very strong buy flow. So, they expect high delivery volumes in Godfrey Philippe in today's market. And the last is Union Bank. Again, the stock is marginally under pressure, but there are limit sell orders from larger FIs, is what I understand, in Union Bank in today's market.
Okay, thank you very much for that. Now let's get to a few BTST calls for the weekend. Mitesh is back with us. Mitesh.
I think there's something happening on the charts of Coal India. So despite in a weak market, the stock is showing amazing strength and the indicator setup is quite positive. We'll take a BTST here with a stop below 469. Maybe a 485 kind of a level can be tested. And Godrej Consumer Products is a BTST with a stop at 1240 for targets of 1270.
Okay, all right. Thanks a lot for that, Mitesh. Well, we had JSW Infra that posted a good set of numbers. Vivek joins us. He's had a closer look into the numbers. Vivek, good numbers?
Well, absolutely quite a good set of numbers as far as JSW Infra is concerned. Quite a steady up move in terms of the kind of volumes that the company has managed to handle in terms of cargo handling capacity as well as the actual cargo that has been handled. Looking at the numbers once again, revenues higher by almost 20% on a year-on-year basis. This is on the back of Q4 cargo volumes higher by 9% on a year-on-year basis at close to 29.3 million tons. The EBITDA higher by almost 29% and margins to expanding almost over 300 basis points. The back of that, profitability higher by 10% on a year-on-year basis. Now, when you're talking about FY24, cargo handle has actually gone higher by 15%. But one thing that will actually give quite a bit of confidence as far as the analysts are concerned is the fact that the third-party cargo that the company has handled has increased to 40% now from 33% earlier. So at the start of FY23, it was a lot higher given the fact that it was mainly group captive cargo that JSW Infra was handling. Now that particular third-party share has gone up quite significantly higher to 40%. Now along with that, the company has given a guidance in terms of the cargo handling capacity that they intend to reach by 2030, and it's a significant jump that they're anticipating. Almost 2.4 times is what they're anticipating. They expect to have cargo handling capacity of almost 400 million tons per annum, and this is from the current 170 million tons per annum. Remember, at the start of the year, it was close to 158.3. There were a couple of acquisitions that the company has made. So one thing that we will need to quiz the management about is, do they have any inorganic plans in the future? What is it that is on their table currently that they are viewing, and what will be the guidance that they can provide as far as FY25 is concerned.
Okay, thank you very much for that. By the way, even as the market recovers, Bajaj Finance is selling off. So Bajaj Finance has now got just a gain of less than 1%. So from the day's high, it's lost close to about 6.5%. Hemang Jani is now with us on the show. Hemang, any standout performances for you in the earnings season so far over the last 2 days? Anything you'd like to comment on?
So, good afternoon. The result season has been by and large okay. And I think when you look at the performances, banking, automobiles, these are the two pockets where we've seen a strong performance. Particularly, we think that auto as a space, even the growth outlook wise is very well placed, particularly two-wheeler companies. So when you look at something like a Bajaj Auto, Hero Motors, TVS Motors, these are the names where we think that the momentum in terms of monthly numbers and the outlook in terms of rural growth is getting better. So we would be more comfortable getting into those names. I think IT as a space has been a major disappointment. So though you might see a bit of pullbacks for whatever reasons, I think by and large what is coming in very clearly is that the growth outlook is not looking that great, and one would really want to stay away from that space, at least for the near term.
All right, Hemang, stay with us. For the time being, we got a bit of recovery underway because we were down nearly around 240 points. Now we're down 150 points. Let's slip into a short break. On the other side, we'll continue more market talk.
Welcome back. Well, we're in the last leg of closing bell, and tomorrow is going to be an important Saturday in terms of earnings because we will be hearing from Kotak Mahindra Bank. I'm sure there'll be a lot of questions to the management with respect to recent developments, but earnings, of course, in focus as well. Let's go across to Abhishek for a preview. Abhishek.
Wall Street is anticipating the slowest growth in NII and PAT on a YY basis in last 9 to 10 quarters. And as you rightly pointed, more questions will be asked about the future outlook rather than Q4 numbers. So the key things to watch is deposit growth is expected at 17.5% YY and about 4.5% sequentially. Loan growth is estimated at about 17% YY and 4.3% sequentially. The net interest margin can decline YY and quarter on quarter due to rise in cost of funds. So Morgan Stanley estimates 58 basis point decline in net interest margin YOY and about 5 basis points sequentially. You need to watch out for the low cost deposit ratio. It was at 47.7% in the previous quarter. If that improves, then there can be some cushion on the net interest margin decline. Slippage is expected to remain stable quarter on quarter. Now Morgan Stanley estimates a slippage of 1200 crore versus 1177 crore in the previous quarter. So asset quality may improve. Motilal Oswal estimates gross NPA ratio at 1.69% versus 1.73% in the previous quarter. Management commentary and outlook will be the most important factor to watch out for. On a standalone basis, our polls suggest NII growth of 9.3% YOY and about 1.8% sequentially. We are working with a profit decline of 3.5% YOY and a growth of more than 12% sequentially. Back to you.
Okay, thank you very much for that. Hemang, come in on Kotak Mahindra Bank. This week it's lost about 4%. Year to date, the stock is down close to about 18%. Attrition is there, regulatory issues with the credit card. But, they often say that the best time to buy a good quality franchise company is when there is bad news. Is this the case when it comes to Kotak Mahindra Bank? Is this a good time to accumulate for the longer term? Or do you think the issues that they're facing could have deeper ramifications?
Rima, I think Kotak Bank and HDFC Bank both went through their own sort of issues, challenges. In fact, in case of Kotak Bank, after a severe underperformance, we saw this RBI news and the stock from that point is down almost about 12 to 14%. And after almost about 3 to 4 years, we are seeing that, on a price to adjusted book, the stock is available at about 2.5 times forward. So I think from that perspective, it is looking quite attractive. The only thing is that you might have to go through a bit of a grind because of this entire RBI thing and what kind of impact it would have on the growth. And B, recent block deals have happened. So market takes its own time to settle down. But I think purely from a valuation perspective, a quality franchise like Kotak being available at 2.5, 2.6 price to book looks to be quite compelling.
Okay, got that, Hemang. Let's talk about the other reaction today, Bajaj Finance, where finally, that company's got some relief from the RBI. They've allowed those two products again. But look at the stock. It's been very, very range-bound. And today, even though this was apparent good news that came in, the stock completely, fizzled out on the momentum. What do you make of it? And would you buy Bajaj Finance now?
So the market is probably not in a mood to kind of, give these kind of chunky valuations, though you may have a little bit of relief because of either this RBI news or the numbers being slightly better, etc. But the biggest issue for Bajaj Finance is that it is very expensive at 4.6 price to book. B, the growth numbers, they don't look that great. If you see the management call, they were not sounding that confident. You have a major, risk of disruption with many big platform companies entering into the similar space. So I think it would make sense to be with a bank like maybe an ICICI Bank, Axis Bank, versus a Bajaj Finance at a much higher valuations.
What about Godrej Properties? The Q4 numbers look good. We've seen the highest ever bookings. The new launches have been driving growth for them. But then the stock was under pressure because of the family settlement. Where do you stand on Godrej Properties?
So I think as a space, it has done well. If you look at the recent performance, both the quarterly numbers, the guidance is looking great. I think the family settlement front, there was a bit of a disappointment because the entire land value will go to the other company and it will not come to the listed ones. So a small setback to my mind, because at the end of the day, when there is a land bank, a large part of that is already known and it is factored in the price. So I don't think that was such a big negative. Overall, we continue to be positive on Godrej Property for the kind of growth that it is displaying and the visibility that it is giving.
Okay, Hemang, finally, just the last couple of minutes to go. So, we leave the floor open to you. You tell us about anything that's really stood out for you this earnings season. Any actionable idea where you think the price still justifies perhaps an entry?
I think season has been reasonably good. I think auto is something that we've been liking. We touched upon that, and we think that given the momentum which is there on the monthly numbers, on the rural side, we are hearing that things are looking far better. So would be comfortable, buying into something like a TVS Motor, which has been slightly underperformer vis-a-vis Hero and Bajaj, at least in the last 3 to 4 months. And this monthly number, it had the highest delta when it comes to the surprise. So I think, auto pack, particularly two-wheelers and TVS is something that we are comfortable, buying into it.
Okay, got it. Hemang, thank you very much. Good chatting with you today. You have a good weekend and we look forward to the next conversation. Thanks very much for joining in. All right, so let's wrap this up. I mean, you'd have to say from the Bulls' perspective, slightly disappointing, but then sometimes pauses and, a little bit of a consolidation is exactly what the, doctor orders. So, and that's what we've got this week. For the week as a whole, the Nifty is flat. The Bank Nifty is still up about 1.5%. Mid-caps are also down marginally. Today, of course, was a down day and there was no sign of buying coming back in even towards the end. So the net result is about a 200-point drop on the Nifty, 1% dip coming through. Bank Nifty is lower by about 0.7%. And the mid-cap index relatively better off, but it is still nursing a cut of about 0.4%. Let's talk about the movers and shakers. And on the index, leading it from the way down is L&T, Maruti, Reliance. These are the big names on the downside. Bharti Airtel had a bit of a tough day as well, 2% lower. And of course, Kotak Mahindra Bank, which is going to be in focus, earnings tomorrow, down about 1.5% as the day wraps out. We'll also get Titans numbers when we come back on Monday, 1.5% down on that stock as well. HDFC Life has lost quite a bit today and this week. HDFC Life is down 2% today. For the week, it's down 4%. Remember, Yash has been telling us that maybe the final or the last word has not been said on those surrender value regulations, and maybe there could be something more which is not favorable for the